What's up, guys? Justin at Ivy League Trading. How are you guys doing today? I hope you guys had a blessed day. Um, what a day, guys. So this is our market recap. We want to go over what happened in the market, what we think is going to happen in the market for the rest of the week. We'll talk about some trades. What were our thoughts, leading into the market? How did they pan out? It's only Tuesday, first day in the market after a holiday break. If you don't know by now, we trade options, we trade futures, we trade. We really focus on the equity markets, guys. So if you find this information valuable, if you learned something, please hit the like, subscribe, share button. If we've earned it, hopefully we have some things in store here that you may learn. If you have any questions, comments, post them in the chat, guys. Any tickers going in tomorrow, post them up. Why are you looking at them? So what happened today? Man, honestly, there is just news all over the place. There's news all over the place. All right, S&P's broke above the 23.6 that we've been watching here, which is the weekly 100-day. This is the weekly 100-day that has been acting as a brick wall. Okay, so we've been keeping an eye on it. Not sure if anyone else, or not sure if you guys have known, but it's a little hard to see here. But this 50-day or this 100-day weekly this 100 weekly moving average, it's so weird to say, has been a brick wall, guys. It's been a brick wall. So what do we got? All right, we have there's just news all over the place. We're going to go over some data. We're going to go over TLT, the trade of the day that we were not able to take today. I was not able to take TLT today. I could have. It gave me the opportunity, but I'm going to look to possibly get in it this week. Maybe we get another pullback. So let's get into it, guys. The S&Ps, we closed red. We did close down. We closed down. Well, it says here we closed up 0.4, but the daily's saying we closed red. So let's go over to the data. So tomorrow, guys, we have JOLTS job openings. All right. We have some Fed speakers. Lagarde is tomorrow morning. You want to note what she has to say. You see what clues she also gives. Like I said, we've had Powell. We've had the whole bunch. You have Powell who told us he feels like he wants to pause. And then you've had a 50-50 split between the rest of the Fed. Now, don't quote me on that. It's some want to raise, some want to pause. But no cutting. So no cutting. So tomorrow we have JOLTS job openings. Now, unless there's a surprise here, I don't think it's going to be that much of a big deal. You want to watch the Chicago PMI as well. All right. I think for both of these data points tomorrow, you also have the Dallas Fed Service Index. All right, which is, it's saying it's not important, but I would keep an eye on it. 17-week bill auction tomorrow. All right, we're gonna get into bonds. Okay. Keep an eye on GDP growth for Canada. GDP for, was that Ireland? Germany? So there's a lot of data points for around the world. We're going to get into this too, guys. We're going to get into all this. All right. The world is pretty much red. And we have AI. AI is just keeping us, is holding us up, really. As much as it didn't seem like last week people were saying it was just a few, you could argue that there was, like the end of last week, there was a few, the majority of countries were green. So let's get into it. Let's see here. Let's go into the world, guys. See what I mean? Look how red. Taiwan semis, China. I'm gonna want to touch into this, guys. I want to give you guys some trade ideas. All right, Brazil. These are what I have written down. All right. So I'm going to get back to this. Let's go to the full. you guys want to pay attention, and there's, if you feel like you don't really have any ideas, okay, we have AI and whatnot. Now today, from my perspective, today was just a continuation from Friday. Today was a continuation from Friday. All right, which we knew going in. You know, we knew this going in. So what does that mean for Tuesday and Wednesday? You know, if data just, we don't really have much until non-farm payrolls. You know, you don't have much until Friday, and even non-farm payroll. What if they come in line? It may not mean much. You know, it could be a boring week, guys. It could be a boring week. So we'll have to just keep our eyes and ears out for any news that may pop up overnight, and that we may wake up to. All right, let's go here, guys. I just want to pull up the 5-minute chart real quick. All right. So here is, actually give me the 15. So these turquoises here is the close, low, and high. Usually I would put it where the high is of the day, not necessarily pre-market, but all right. So I said this was the level I was looking for today for the SPY. It was right here. All right. We ended up breaking it. It's now resistance. So what does this mean for the SPY and the Qs? Now, if AI cannot further advance, or we don't have some kind of news, okay, the debt ceiling is over with. Do we go higher, or do we put in a range? Do we sit flat, you know, and just have an inside-out week, like a 8-point week, possibly 10, you know, if we get news? I don't know if we'll get a 10-point week, but 5 is definitely feasible. 5 is really feasible, 5 to 8 points. Maybe we put in a range. Okay. So I want to get into TLT, which was the trade idea that I had for today. All right. I was unable to take it. I got a call from a family member. I had to go run. All right. I got back 9:50. You know, I got back just right before 10 o'clock, maybe. So from then I looked, and I just wasn't rushing, and neither should any of you. If you guys are watching this, don't trade just because you want to put on a trade. You know, make sure that you see it, that you're comfortable, that you're ready, that, you know, you've done the prep work. Because in the morning, I do all my prep work. I do prep work the night before, and then I do prep work in the morning. Okay, that way, you know, I've got my game plan. You don't know what pre-market volume's going to look like, you know, until pre-market volume is, you know, until it's pre-market. So, which doesn't mean that you're going to get like a high volume type of day, you know, but you at least have an idea of what's going on, what, you know, you can come up with a game plan, and you have to come up with a game plan. Now, I had a game plan, so we'll get into it right now, I guess, but I did want to teach you guys, so I just wanted to give you guys a fun fact in case you didn't know. All right. So you have different terms and meanings for the Treasury, okay? 1 year or less is a T-bill. It's a Treasury bill. It's not a bond. They don't call it a bond. It's a T-bill. All right? 2 to 10 is a Treasury note. Your 2s and 10s are Treasury notes or T-notes. 20 to 30 are Treasury bonds. So I figured that was just a fun fact that I didn't think very many people know about. So here we have TLT. This is the 15-minute chart. Okay, this is the 15-minute chart, and what I have drawn here is the Fibonacci retracement from what I suggest is the start of the down move. Okay, this to me was the start of the down move. So if we go back, I probably have to go to an hourly chart, but you can see this trend here, this line, and up here we were putting in a range. We were putting in a range. Can you see that range there, guys? See this range? Low, high, low, high, low, high. You could say this was the start, but really, this was the start to me. All right? Now, how do am I reading it wrong? You could pull it from wherever you want. I can't tell you what to do. This is the down move, okay? There was this down move, and then you had an up move. You had a 2-day up move, all right? So, yeah, I probably could put up there, but this is the down move. You had no retracement the whole time. All right, so I drew the fib. Where's the fib at now? The fib is at a level that I think is a level of significance. All right, and that would be the 38.2 fib at 102. All right, that level is going to be 102. 102 right now is resistance. So we're going to have to see if we either gap up above, if we gap down, possibly hold low of day. So coming in Sunday, I seen TLT, and we're down here at 100. Now, personally, I should have been long TLT on Friday, but there were so many other things going on that I didn't really, I didn't pay attention to it. Look at this, guys. So what I want to show you is negative divergence or bullish divergence, okay? I get so frustrated with Thinkorswim sometimes with this stuff here. So what happens is, you see the stock price is just going down. It's going down, 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 down. All right? There is no real pullback here. Well, there is, but, it's a longer term stretch. So what do we have here? 1, 2, 3, 4, 5, 6, 7 day, 15 minute. All right, we have some nice volume here to the buy side, guys. Look at this day. And what are we approaching? We're at 138, okay? Again, we're here. It doesn't want to break below this 100 level. It's holding strong. And what happens, you see here on a day like here, buyers were technically stepping in. There could have been news. There could have been a reason. I'd have to go back to see what day it was. But anyway, all right. Anyway, there's a nice double bottom here. There's a double bottom on Friday. You have a very nice double bottom on Friday. Now, what I want to also show you, okay, look at this. The stock is going down, okay? The stock's going down. And what is the MACD doing? I'm going to go right here because, I could go here, but I got to make it wider, blah, blah, blah. This whole time, the MACD is making higher lows. That is bullish. That is bullish divergence, y'all. We finally broke positive on the MACD. We broke positive Friday, obviously. Friday was a strong day, obviously. I mean, if you guys seen the SPY Qs, We're going to get into the indexes because there's something I would like to talk about there as well. All right. So coming in, I wasn't able to get much work done because, there was just things going on. Like I said, trade when you can, not when you want. All right. So I came in Sunday night and I was going through some charts and I noticed TLT was back down here at 100. Now, during the trading week, I always have an idea where they are, where they open, or not necessarily where they open, but where they closed. I know where oil is. That you can ask me where did oil close. I will probably give you within a few dollar range, like 61, 62. Let's just saying if that was the area. Natural gas, gold, S&Ps, Qs, I have an idea of where they are. All right. So my thoughts coming in on Sunday, right? I said from the information that I took in on Friday, okay? From the information I took on Friday, we were here. There's none of this. Tuesday didn't happen. On the SPY, okay, I was looking at the SPY and saying, I think we could be due for a pullback, okay? Now, this was Friday before we got debt ceiling news, okay? We could perhaps we could use a pullback. So that was my thoughts. Again, climbing higher, lower MACD, climbing higher. Well, this is today, but anyway, this might be good for tomorrow. So I thought, since I felt Friday that, I felt the markets could pull back, and we did. That happened today. I was not short the SPY, unfortunately. I did not short the SPY. Did I want to short it? No, because there's no real momentum there. There's a few points to be had. All right, there's a few points to be had, possibly a scalp, maybe an hour or two, maybe, yeah, maybe 2 hours worth of a trade. And, I don't really want them. I want a momentum type of day, like Friday or, in like AI on Friday and today. We played AI again. We caught AI on Friday. So when I see days like this, first off, I'm just looking for base hits. Sunday night I came on and said, I want to look for TLT. I want to be a buyer around this $100 level, okay? Friday I missed it, but that's fine. That, you don't have to be the first to the party, okay? So we got this pullback here, and this is when I got home. We pulled back, as you can see. What's that? 10 o'clock, 9:45, 10:15. Perfect buying opportunity, and I almost put the trade on. All right, I almost put the trade on, but I didn't. Where would my stop be? I'd probably I could give it to the low of the day, which is 101.25, or I could give it prior day's close. Okay, maybe I could have given it prior day's close and gave it a little room. Now, I could also watch the dollar. I could watch the 10-year, which is TNX, which is kind of what I'm going off of on here. They're not necessarily, they're inverse to an extent, okay? It's not 100%. But for the most part, if you were to look at TLT and TNX, which I could pull up, all right, and we bring up the daily chart, okay? Now what I'm going to show you is a difference. Now there's no macro thesis here, okay? This is just a trade that I was like, I felt we were oversold. We had bullish divergence. And it was a trade that I liked. And it also was backed up because I thought the SPY was going to pull back. I felt as though the SPY could pull back. We're so extended. We need to test a 50-day. We don't need to do anything, but I felt like a pullback was a bit necessary. So here we have TNX, which is the 10-year Treasury. You see this down move here on TLT? Well, there's your up move. Okay. Now if we even expand this, see your little check, or the move up, down, move down, go up. All right. Then you have your little flattened out here. So we're on the top end on the 10-year is at the top end. Now I can use a lot of different things, okay? I could use banks, for instance, I could use banks. There's a lot of things I could use. Well, if you were with us, again, we trade live Monday through Friday. Around 7 a.m. we come on, 7 to 4. So if you would have caught our live stream Sunday night, if you would have been on stream today, you would have known that, I was wanting to be long TLT. Now, whether it was a day trade or a swing trade, we were going to let it decide for us. Again, we were going to set our stops to the low of the day or the Friday's close, or Friday's close. And it doesn't touch it, we don't get out. If it goes higher, we take profits along the way. All right. Now, I would like it if there was more moving averages between the weekly and the daily. Like, I don't really have much except on the daily, or the weekly, I mean. You have the 9 trade. There's your 50-day. It's hard to see. I do apologize. My cat's being a little angry, but she's been fed. And so, and that's all, guys. Like I said, I was wanting to be long TLT. I got a phone call pre-market, and I had to make a run. It is what it is. So the trade line here, look at it. This is a weekly. Okay, for the most part, this consolidation with the 50-day, look at it contending. It's been contending with the 9 EMA and the 50 weekly moving average. Okay, let's go to the daily. And this is your range. You can see it right here. You want to be short. You want to be long until things change. So that was the trade idea. We're at the bottom of the range. Give me the long. I also feel like SPY could pull back. SPY pulled back. TLT up. And when I scan it back up the when I go back to FinViz, you're going to see it was actually, if you were to play TMF, it was almost a 4% move, which is the triple leverage 20-year. I'm pretty sure. Don't quote me, but I'm pretty sure it's TMF, and I'm gonna show you guys that. So sorry to make this so difficult. So we've broken above the 9 EMA on the daily. All right. Now, like I said, where are my profits at? Okay, well, this is one. This is one here. We're taking a piece off here, you know. But really, we want to see if we can start to get back up to this 103 area. You know, we want to see what happens. We want to see what happens with the Fed rate hike probabilities. The Fed rate hike probabilities have actually been going up, okay? If you don't know, they've been going higher. Hold on, let me get this up here for you. I thought I had it. So I had everything up here ready to go, and everything got taken away. So this is, what is today's date? I just want to make sure the dates. So this is for the 4th. This is 14th of June. Okay. Meaning contracts for current. Okay. So now they're coming back down, guys. Like you see, as of, I'm pretty sure it was Sunday. Sunday we were pushing 60-some%. Now I'm gonna tell you guys that I do not think the Fed knows what they want to do. All right, I think they want to pause. I think Powell wants to pause. Okay, so Sunday night we had a really good live stream where I went over, if you don't know, and we said, what can we do to see how much interest rates have filtered through the system? Okay, well, we went back and we went down. The market is supposedly a 6-month forward-looking mechanism. Well, we went back. We went back 6 months, 12 months, and 18 months. So worst case, 2 years. Also, I didn't put down 2 years, but I could have. So at 6 months, you have a 3.83 Fed funds rate. Okay, so that means you still have left about a 1.25% left to be felt. Okay, if we go back 12 months, the effective Fed funds rate was just under 1%. So you still have 4.25% basis points still to be felt that has not been felt, that still has to filter through the system. And then your 18th month, which is just under a base, a tenth of a percent, which is just under a basis point. So that means you still have just about 5% that they actually have not felt anything if you were to look at the 18th month. So if we look at the 18 months, all right, then we can say, well, wow, they really haven't felt anything. So does that mean next year, the beginning, like January, February of next year, the end of this year, is that really when things are going to start kicking in? You know, nobody knows for certain anything. Okay, like we said, and we went over this with what is a treasury bond? What is a treasury note? What is it? So that is how much you will get paid in interest in different maturities. Well, I'm so sorry. We know what a damn treasury is, but the treasury yields are how much you're going to get paid in return. All right, for whatever time frame it is that you go with. So, with that said, I think they still are. I don't think we're going to get a rate hike, guys. I'm going to say this is my own opinion. I do not think we're going to get a rate hike. Okay, so but keep your eye on this. We could get some data that could this thing could just flip. It could go up to 80, 90, or it could go down to 25. You know, pretty much 20. It's hard to say. It's hard to say, but that's if we get data that surprises. And if we get data that surprises, you better be watching TLT. Or if you want to play a shorter term to the yield curve, if you want to play the 7 to 10, that would be IEF. IEF is a 7 to 10 year treasury. Okay. Now it looks just about the same. All right. This is IEF. This is another ETF that you can play that tracks the 7 to 10 year treasury bond. All right. So, maybe now these are trade ideas that I want to bring up. So, if on Fed Day, if you want to look at the S&Ps, or if you want to look at the Qs, you want to look at the VIX, you want to look at treasuries. Now, what year treasuries do you want? It doesn't really necessarily. It depends on. It kind of depends, but it really doesn't. Okay. Now, these are ways to mix up your trading to be able to hedge. I'm not telling you what to do. I am not a financial advisor. I cannot tell you what to do. I am just bringing forth different examples and ideas that you can use in conjunction with others to be able to hedge your positions. Okay? Maybe you go long SPY and you go long TLT, and maybe you're long, or maybe you're short banks and you're long TLT, and they both work out. For an example, okay? Maybe you're playing AI, okay? You're long AI or NVDA, but AI was the winner because you should have been in AI for multiple reasons, but because there's a the short float on that's pretty decent. So we said that Friday. That's why we were playing it. So I don't want to get off track. So I'm here to help bring up ideas for you to be able to go to and say, maybe I want to trade Brazil. Now you got to watch, because some of these may not be that liquid. If you have the capital and you want to just buy the stock itself, still, you got to watch. The spreads might be wide, or find some that, that aren't that are liquid, because there are some that are liquid. This is why the United States is who they are, because we have the most liquid markets. All right, so we've had news. Okay, that was my trade of the day that I didn't trade. This was my trade idea, as of last night. So, what else did we get today? So that was TLT, okay? So TLT would have worked out great, guys. That worked out great if you were on a live stream, if you ended up trading it. Let's go look. Let's see here. Boom, boom, boom. Exchange traded funds. Let's go. See, look, TMF. That is the 20-year treasury 3-time. That was up 3%. Okay. Where is TLT at? There it is. So it was up 1%. It's not bad. Especially if you got in Friday. Whew. You're up a little bit. I wish I would have known. So keep your eye on UNG. Keep your eye on USO. USO is getting to that level to where it may be a buying opportunity. It's hard to say. I'm just keep your eye on it. I know I've had my eye on it at these levels. Okay, you can see here. The job market is still strong, guys. We still have a tight labor market. People are still going back and forth to work. People are still working. Okay, so that means fuel. Fuel for equipment, their cars, all kinds of stuff. Manufacturing, So, I want you guys to look at also. So, PayPal was up today. Also, sorry, my cat just came in here and messed me all up. But these are trade ideas, guys. Just watch USO. So we had what was up today? Because now my piece of paper, my little girl's sitting on it. Baby, I gotta get this. I'm sorry. Keep an eye on the VIX, guys. You always want to keep an eye on the VIX. VIX is getting to that level to where it could be an opportunity. So let's go here. We had today, guys, we had Moderna, PayPal, Tesla. All right. They were up pretty big. I don't know why PayPal was up. Okay. I don't know why. I honestly, I don't. Okay. There's another one, Quanta Service. So some of these stocks are going to be on my list. Netflix, and then obviously your NVIDIAs, your Qualcomm, your AI stocks. AMD took a hit. Target took a hit. All right. I don't know the news that was there. I don't know if it was earnings related or not. Mondelez took a hit. I think it was Barron's that was talking about casino stocks and all that. So keep your eye on these things, guys. Okay. Now let's go to the world. Brazil. Vail ETF down 3.77%. All right. BGNE, Cayman Islands, down almost 4%. Okay. Now you can see what's going on. You have all these issues in China, so you need to watch the China ADRs. All right. BABA down almost 3%. JD down 3%. Okay. PDD 5.31%. ZTO 6.77%, guys and ladies and gentlemen. So keep your eye on these things. All right. There's opportunity all over the land, all over the place, guys. You want ETFs? There you go. All right. Notice what's red. Notice what's green. All right. This is the broader market for look at, you got agricultural or aggregate bond, sorry. Bond market ETF. So this is your fixed income section here. And then municipals is your sovereign. So it looks like, again, the 10-year was on the top of the range. 20-year was on the lower end of the range. So what did we see? We seen the 10-year pull back a little bit as expected, which brought TLT up. It doesn't necessarily bring TLT up, but so yeah. What else did we have? We had news in MSO. We had MSO news. Okay. Now let's bring up, and I'll bring up MSOS has just gotten crushed, man, and I feel so terrible for anybody that has bought any of these wheat stocks, and then you've had the whole time back here, you've had the biggest pot people, you know who they are. We don't have to give out any names, telling you to go ahead and buy the dip. They told you to buy the dip. Why'd they tell you to buy? This is what I hate about this industry. I don't hate it because it should be your responsibility to make your own decision or go see a financial advisor if you can't come to your own smart, reasonable, common sense conclusion. Okay, Fed's raising interest rates. What's that going to do to companies that aren't even federally legal? I mean, come on, guys. They told you to buy the dip. He was screaming, buy the dip. And you were being called something, if you know who I'm talking about. But anyway, and then they'll just come back and say, oh, I told him to sell it. Bro, not through here. Not this whole pullback. But talking about buy the dip. Talking about buy the dip. Now look at you. You lost all of your money. All of your money. Gone. Trade a core, hold a core, trade a core. You lost all of your money. It's shit right now. Now you are putting in a base here. This is where you want to start thinking about buying. You know what I mean? And even then, you could still go down 50%, 25%. But chances are you have probability on your side now. Okay. So what did we have? We had a few different news. We had a few different news hit. We had Illinois lawmaker bill allowing MSO businesses to claim state deductions as what so Illinois, yes. God, I just feel so stupid and ashamed because now my cat, you can't see this, but my cat just covered everything up on me. She said nope. And you had Minnesota legislation signed into law, legalization of marijuana. So there's news there. I didn't see many people talking about that today. And you gotta, look at the volume had coming in. So watch for tomorrow. See what happens tomorrow. These are some ideas for you. And like I say, that's for the most part, that's what I have for you guys right now. The S&Ps, I think we're gonna I'd like to see us have a pullback. So what I was actually thinking was maybe this Fed, this Fed probability, it was going up and maybe it was going to continue to go up. And I was thinking maybe this is just a pump fake to bring the markets down a little. Make it seem like they really are going to go raise another 25 or 50 or, well, we know they ain't doing no 50. And I can almost assure you they're not going to do 25 unless something changes. So here's my thoughts, guys, because if you get like a better than expected non-farm payroll number, you're going to see this number probably go up more. There's no pain yet to be felt. And until the numbers start going to where they want it to go, I don't know their ultimate goal. Like, I don't know what they want. I honestly don't. None of us do. They want a sustained period of growth. Well, they say that their job is maximum employment, or price stability and maximum employment. Okay, well, China's opened back up. Seems as though inflation is also, it's at the rate of which is around 2%, but year over year is not 2%. So, price stability. Does that mean like that means you just step in when things are continue to go up, but you don't bring them back to where they were so people can afford them? No, that's not what that means. So I don't know. With that said, I don't think we get a 25 basis point rate. I don't think we get a rate hike in June. I really don't. All right. Now, if the data comes out and suggests otherwise, then possibly. So what could help us? What's the information that we need? Well, to make up a decision as we get closer to the meeting. Right here, Lagarde. You want to hear what she has to say. What's her demeanor? Okay. What is it? What are the things that she is seeing? And, get a feel. Like, does she really feel, pretty strongly that what they've done isn't enough? Are they not worried about the lag effect to an extent? Because they've always preached. They have preached that they have tools to fix anything that gets broken. All right. So what are you just trying to? But by saying that in and of itself is pretty much saying I can just send this thing through a whipsaw. You know what I mean? We're just going to whipsaw the whole market and economy around. We're going to go from one extreme to the other, from one extreme to the other. That doesn't sound like a intelligent thing to do, personally. So 10 a.m. Jolt's job openings. Okay. I wanted to touch on gold, guys. So something you guys may not know and you may want to look for is look at gold prices in different currencies. All right, look at gold in different currencies. Like here I have gold and the euro. Okay. Now this is just what I found. I put it up. All right. So back here. So I was long gold back in December. Okay. End of November into December. All right. I made the right call. We damn near caught the bottom. Well, if you would have looked at gold back in January, maybe February, you would have known that in the yen, the euro, the Aussie, gold was making a new high in those currencies, okay? And lastly was the US, okay? Our dollar was strong, but what did we do? We made a new high in time, It was a lag of about 2 to 3 months. I would be safe to say it was about 2.5, 3 month lag. Okay, so keep those things in mind. Okay, that's what I want you guys to get out of this video is things of that nature. Especially if you're gonna play like gold or silver or anything, where is the price of an ounce? Where is it at in other currencies? In other currencies, okay? Because then that could also help you make a decision in dictating, direction. You want to just have as many the direction. You want to have as many things as you can on your side to help you with your trade probability. Okay? So that's pretty much what I have for the day. We wanted to, I said, coming into today, pull back on the S&Ps. I felt that was just my decision, and I also want to point this out too. Is Sunday night after the debt ceiling had passed, I started feeling a little. I'm like, man, I don't know what we're gonna do. Now that's the psychology. Now what changed from Friday to Sunday, other than the debt ceiling being passed? Even though we already knew it was going to be passed, we said it was going to be passed. The politicians told you it was going to be passed. So those are the things you got to think about within yourself, and try and take notes on what your thoughts are from day to day. How did you feel Monday? How did you feel Wednesday? And then how did you feel at the end of the week? And then how do you feel going into the next week? And then after that weekend break, going into Sunday night, Monday morning, how do you feel then? Okay, take notes about that, because that right there is psychology of the market. I started feeling a little like I was not necessarily on tilt, but I still didn't change my thesis. My thesis was, we could see a down day, and we got the down day, all right? So I want you guys to take notes on that, because that is psychology of the market in a nutshell, okay? So the majority of the S&P is flat red, if not red, all right? So go through, come up with some ideas. If you would like to have some more ideas, all right? If you want to come hang out with us, we're traders that, act like they know what they're doing. For the most part, make conscious decisions on probability, on what side of the trade we should be on. And so far, we've been doing a great job. So far, since I've came on, we've called this market to a T, guys. We've called the upside. We've called the pullback today. We called TLT Sunday. If you want to put yourself in the right probability, come join us Monday through Friday, 7 a.m. to 4 p.m. If you could, and you found something here informationable, something that you could use, all right, hit the like, hit the subscribe, share. Greatly, greatly appreciated. One more thing that I was just thinking about, I want you guys to pay attention to. It's like solar stocks. Okay, solar stocks started to get a bid. Okay, they've had a bid, I guess you could say. But FSLR, Sunrun. Now, why did they have a bid? I don't know. Maybe just because they've hit a new low, and I don't know. I'd have to go see if there was any news. Okay. Oh, ChargePoint, I think, also had a price upgrade, I think, or they had earnings. So they had a great day today. Look at that. Gap up, gap and go, guys. I love those. I love the gap and goes. That's like, if you go back to the videos, what did we do? What did we play AI on Friday? We played a double bottom gap up. What was the plan today? TLT. Well, what did TLT do? It had a double bottom gap up. It gapped up, put in a double bottom, and ran. Look at this, guys. Hot damn. Look at that. Look at that. All right. Okay, I thought so. I knew they had earnings this week. The price upgrade, wasn't sure. Yeah, so I think it was the price upgrade. Google, we wanted to Google short. We didn't. I didn't grab a hold of it, but we did call it out. So tomorrow morning, I'm going to go over some charts tonight. I'm going to have a game plan ready to go. Okay. And we're going to attack this market. What do I think happens? It could be a boring week unless we get some surprises, maybe Christine Lagarde, maybe jolts, maybe we kind of just sit around 5 to 6, 7 points, 5 to 8 points, we'll say. Call it 5 to 8 points till non-farm payrolls. So with that, you guys have a great night. Again, if you could, like, subscribe, share, comment, post your tickers. All right, we'll go through them. You don't have to trade alone, guys. We're here. Come join Monday through Friday, Ivy League Trading, youtube.com, 7 a.m. to 4. Again, that's Ivy League Trading. I come on around 7 o'clock. We see what the news is. We go through things. We do have a question. I'm sorry, I didn't see that. What do you expect for tomorrow? What do I expect for tomorrow? See, that's what I mean. I just went through and said we have Lagarde. I'm not one of them going to be ignorant and all that. So let me put that up here. So like I said, we have Christine Lagarde. Shit, that's not what I want. So look here, guys. Other than the data, I mean, look at this. You have GDP for Canada. You have GDP for Ireland. GDP for Germany. You know what I mean? So you gotta keep watch. We gotta wait until the morning. Like I said with this, what's that? And you're asking what I think about tomorrow for the SPY. Well, you already put in resistance here at the 419 or 420 area. You know what I mean? Like I said, give it about 5 to 8 point swing. Maybe you're sitting here at the 23.6 fib. This 23.6 fib is from the COVID low. Why do I have the fib there? Because that's what we're trying to get out of. They're trying to undo everything that they did with COVID. So far, as you can see, it's working to a T. Even your 38.2. Well, if I bring it up on a different, if I go to the daily or weekly, look at this, guys. Look at this range. Bing, 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 bing. So this is on a proprietary chart in an institution. You know what I mean? If this right here especially with your levels, like what we called out AMD, and we said look for this 70. What was it? What was the price point on that? I already had the levels out and drawn, and I went over. You can go over that Sunday night. This was it right here. See this? See how the levels, didn't quite get up that high, but when your levels just come in, this is why you got to trust your levels. If you're new, give it time. But what do I do? What do I think? Like I said, Colin, I think you just got to watch this level here, guys. I think you got to watch this 420 level. Possible retest there. Maybe see what happens tomorrow, okay? Let me take this down a little bit, okay? Let me show you something. So these three turquoise lines, the low, close, and high, they're kind of like, you can use them with your levels to help you with like market direction. Like say tomorrow, say we hold the low, right? We put in a double bottom here. MACD puts in a higher high, maybe we come back up, again, maybe we just come back up to 420, see what happens up in this area, But I would see where we open tomorrow. I want to see because we have so much data, like look, we're already starting to kind of bounce. What is this? I was going to say, that shouldn't be even on. I thought I had ES up for a minute. So there's actually crazy data tonight, guys, and people don't talk about this. 80% of the S&P does business overseas. I mean, look at you're talking inflation data, guys. Like you're getting inflation data from other countries, and look, it's rising. The previous was 7.2. Well, it's not. It actually came out. Let me read this off to you guys. All right, it just came. I think it was Australia. It just came in, and it actually peaked. And I thought June last year when coming in. So I came into the year and I said, give it till like April, May. Give it really June, May, June, July, because that was our peak inflation. And I knew by this time last year that we should start to see things calm down. Australia. APR CPI year over year, okay? Actual 6.8 versus 6.3 previous. So year over year obviously went up. The estimate was 6.4. It came in at 6.8. So it went in 2 basis points higher. So you got to keep this stuff on watch, like Italy. So overnight and early in the morning. So tomorrow when we wake up, go over futures. Go see how futures reacted to this data here. And see if it means anything. If they don't give a shit about consumer confidence, then you know they're not going to give a shit about consumer confidence. Again, you're not going to have. It's going to be illiquid. You kind of want to wait for the European market to open up and the United States market. That's when the true liquidity and direction of movement happens, and that will tell you what they think. That's what the market's going. Those hours are going to tell you the direction and what they think about whatever data was previous and up to date. At that time. So there's some pretty big data here for prior countries. So, you just got to go with what's happened. You want to be a market technician? It's real easy. The low of the day is at 418. Does it test it and hold, or does it test it and break? If it tests it and break, where's it going? Where's the next? Where's your next? It's late. I'm forgetting words. Where's your next structure? That was my word. Right here. There's your structure. Resistance, support, broke. We need to find resistance again here, guys. So look for 418. 417, 82, 418. That's how I would play it. If this, then that. All right. You break the low of the day. Now, if you get to the low of the day, see what you do. See how you react when you're there. Do you get an increase in volume that breaks through it? You may not, because we don't really have, at the end of the day, it could be a boring ass week. We don't have anything unless you get news, unless we get banks. We get another bank blow up or talks of another bank going up. All it takes is one of these, like Financial Times, Wall Street Journal. All they have to do is report, a bank went and met with an auditor or a lawyer or someone to see what they can do about their issues that they're having. That's all it takes is one article. So until you get that, I think you just got to go with the flow, guys. There's your range, 417 to 420. All right. Now, if you go to the daily, you gotta, it sucks. I have to do some work. I'm going to do this stuff in the morning because I've been a little busy, but I got to clean these charts up too. Now, look how far away we're extended from the 50-day, guys. Look at this. I mean, you're 10 points away from the 50-day. And there's no real catalyst other than non-farm payrolls and the numbers tomorrow. But there is some data in other countries. But I would... So the market will usually set itself up, and you'll be able to see it in other indices, whether it's TLT, whether it's the VIX. Well, not necessarily the VIX, but the market has a way of showing you. Let's talk about that. Where's the SPY? SPY's there on the daily, all right? Where are the Qs at? And this is how we hammered the short side. But when COVID, we knew risk was being taken off. And when you see the SPY and the Qs up here, all it means is that institutions are in a handful of names that have liquidity. They have so much money, it can take them weeks to get into one position. Okay? If it takes them weeks to get in, well, it's going to take them weeks to get out. All right? They are not playing around. They're going to get into the most liquid stocks, which is Apple, Amazon, Google, all your big tech cap name, or your big tech weighted stocks. I don't know why I'm so tongue-tied. So that's where it's not even that it's safety, because they can come through and have horrible earnings. But Microsoft and those names, they're so liquid. They will not have any issues getting out. There's no issues trying to find a buyer for them to get in and out of their positions. All right, look at this volume on the Qs today, guys. Look at that. It's pretty big. You know, you've outdone yourself. Feel like it's overextended, right? Where's it overextended at? The 23.6 fib, where the SPY's already at, you know, has already broken through. So my point being, all right, where's the IWM? The IWM is still down at lows. The market, a healthy market, you guys got to understand this, all right? Go back. What happened in 2020, okay, into 2021? What happened? You had a nice long rally. You put in a base. You actually started a small downtrend. What did you do there? You tried to make a new high, right? You tried to make a new high and extend with the Dow, the SPY, and the Qs. You tried to have it rally. You tried to have a healthy market and it rally up. Quickly rejected, and not only did it reject, you started your bear market, okay? A healthy market goes up together. There's not a huge gap. If you were to bring up the spread between, let's say, the IWM and the Qs, what would your spread be there? Or like the NASDAQ 100 and the Russell 2000. You could do that one. I think actually Carl Cantanilla from CNBC just posted that today, I think he did. Earlier this morning, I think. Don't quote me on that, but I'm pretty sure. He just posted up the spread of the Russell 2000 and the NASDAQ 100. I think it was like 6%. Something, I don't quote me. I don't know. But listen, guys, this is risk. This is risk. And all the SPY and the Qs are is AI and Microsoft, Google, Apple. They are going to be selling bits and pieces as it's going up and everybody is okay. And then you're going to get where all of them meet up. They will meet up for sure. Whether it's banking news. I mean, you have a lot of regional banks that are in here. All right. KRE is, I was just looking at KRE earlier. My point is you got to look at it like a pyramid. If you were to take a pyramid and just put it upside down, okay, and you have the biggest weighting in the Dow, and then the SPY, and then the Q, and then the lighter weighting down at the IWM, you have a big gap there, and they will meet. What that means is that gap will be filled, and the SPY, the Qs, and the Dow will sell off. Now the IWM will sell off. It may not sell off as much, but you cannot have the SPY, the Qs, and the Dow for an extended period of time. You're not going to go on a 6-8 month binge of just the IWM sitting at lows and the rest of the market's up at new highs. It doesn't work like that. All right, that's not how things work, and you're going to see it. So just keep an eye on this. It doesn't mean that it's going to happen soon. Just give it time. It's the market right here is telling you things aren't right. Things aren't right. All right, and what that is it goes back into what I'm telling you. All it's going to take, this is where these small companies don't hardly make any money. If they make any money, it barely covers the cost of running the business, okay? So when they run out of capital, I've said this before, these companies start running out of capital, they're going to have to either take it from the market, they're going to have to do an offering, all right? Or they're going to have to go to the bank, and now the bank is not going to give them, let alone what they want, but they're going to give them less at a higher interest rate, okay? And then it comes to a point where, if your company just isn't making money, there's companies that are not possibly going to make it out of this. Now, we're not out of this, so I don't know. Nobody knows. But you can expect, if this keeps up for a long period of time, you're going to have bankruptcies. You're going to have them. It's inevitable because they will not be able to keep up. If they run out of cash and they run out of options and their product does not sell at a rate that it needs to sell for them to stay in business, they will crash. That is another catalyst to look out for, and that is what this is showing you. That is what the market is showing you right here, like in plain sight. You're just sitting flat. You're not even trying to make new highs. You're not trying to make new lows either. But if the market ain't going up, it's going to go down. It's just a matter of time. They say there's 3 directions, up, down, sideways. Honestly, there's only 2. If you ain't going up, you're going down. All right? You're going down. Shit, I'm sorry. So I want you guys to keep that in mind. Just use this, guys. Use this as a gauge, because this, what I'm getting at, was a prime example. We rallied. What did the IWM do? It just stayed flat. What's it doing here? It's flat. It tried to rally. Bear market ensued. Okay. I was taught that by a professional money manager who still manages money today. All right. And he taught me that. And I'm like, you know, I'm glad I was able to be told that. And he was right. This whole time in here, he's like, yo, the market is telling you a bear market is coming. Bear market's coming, and he was right. You know, he worked for Lehman Brothers back in the early 90s. Not with the 2008 shit, but throughout the 90s, him and his father, they worked there. So, you know, just keep things on watch, guys. China, there's some news there with China, so you want to keep an eye out on the ADRs, like BABA. I hope that answers your question. I really do, Colin. I hope it answers your question. You just got to be a technician about it. Okay, like I said, you got to watch the lows. You got to watch the close. BABA was down pretty big today. I noticed that from over there. Just got to watch this double bottom if you make a new low. I'm going to go over this tomorrow morning. I'm going to go over all the charts in the morning. But that's what I would do. All right, where did you close? Write it down. What's the low? Write it down. What's the high? You know what I mean? You stick to the low, then, you know, it could sit, if it sits there, and depending, you know, how your tape's reacting, your level 2, does the tape speed up and the volume pick up, and you just crack it, come back and retest it, you know, where do we go then? Then here's your next level, 417.24. This is your next level. This is your next area of structure. Really, it's right here at this 23.6 fib, like I said. All right, look for this to become support. You know, tomorrow we could come down here and test this. What could cause that? What could cause us to break this? What if, look, Christine Lagarde, the European, that's pretty much our J pal over in Europe, and she's actually been in the game a long time. She was there through the 2008 financial crisis. Okay. So this lady she doesn't look as old as she is, but she's been in the game for a long time. Resistance, support, resistance. We have not found support there yet. All right. So see if we can turn this 417.84 into support. If we do, then you look for the low. You know what I mean? You look for this low. You break that low, then there you go. There's your levels. Really, then you would look for the prior day's close. You know, if you were to sell off tomorrow, okay, we would be down probably, let's see, Fridays, and then we close. Just see, we pretty much see today. Technically, it doesn't seem like it, but by the books, if you were to have a line chart on here, we were flat. Today we were flat. All right, we pretty much closed where we closed Friday, just above it. So again, it's starting to start off as a boring week. Okay, we have gotten intraday price movement, but think about that, you know. If we were to sell off, you're probably going to be about, I don't know, what would that be? 6, 7, like just, it would be 6, 7 basis points, 6, 7. I'd say like 0.7%, you know, 0.7 down here, just under, you know, it's probably might even be 0.5%. I'd have to do the math. It's late, but that's what I would do. First, you need to know this weekly. Look, we stuck that 100-day. All right, this is going to be important because you could get a rally. They may expect us to sell off, and people are going to force a sell off. But look at this, man. I'm telling you, people don't look at the weekly and longer term trends. Like, this is what institutions use, you know, as long-term buyers or sellers, you know. But this 100-day right here has been a brick wall. We stuck it. We broke the 100-day. It was resistance, and then we sold off, and then we retook it. Look at that long tail. That's bullish. You know, you don't have that much volume behind it, but you sold off only to retake it. So use that for what it is. All right. Jesus fucking Christ, I can't stand thinkorswim. Anyway, you broke the 100-day. You sold off and retested it. So that's important. Just know that the 100-day weekly moving average is there. Just know that it's here. It's right here, right at the low of the day. Matter of fact, it's at the low of the day. So if we break this, look for the 100-day to become resistance. On the weekly and on the daily, we don't have anything other than possibly the trade line. Again, because we're extended. We're so far extended. So I would look for this trade line, guys. I would look for the trade line to be support. All right, got to look for the trade line. And that's down here. That's a nice day. If we could get some nice movement, that's 416.50. So, which I would think if we went down there, we would be right around here. We'd be around this 415 area. 415 seems like a good psychological number to retest. So I'll be back on in the morning. I'll go over all that stuff. I hope some of this stuff was helpful. I had so much stuff on here that I wanted to watch or that I wanted to cover. But again, guys, keep that in mind. Okay, these companies, we've had 5%. Damn near 5% interest rates in a year. How much of the companies felt? If you want to look at it yearly, they haven't felt but 1%. Okay, so that's more pain to come. If we test this 200, I would love it. I don't know if the market's going to give it to us, but I would love to be a buyer back down here at 380s, 370s. Maybe things get bad enough where the market does give us another opportunity to get back down here at 360, 350s for the long term. I would love that. Hard to say if we do, Hard to say if the market will give it to us, because sometimes the market just, if you didn't get it when it was there, the market's not going to give it to you. So this was such a nice. I played this double bottom here. I hammered that. I hammered the SPY off this double bottom both days. I killed it. This is why I love bear markets. They allow for so much opportunity. But I don't know, guys. Like, share, subscribe if you could. Thank you for the patience, with everything. Keep an eye on the Fed watch tool. It's already went down. It's already coming back down, but I don't really give a shit about it because unless we get data that really surprises, something's going to have to really happen for this to come up or even to come down. I really think it should just come down. But again, remember, you get CPI. We have CPI the day before the rate decision. So this thing could just move all at once, but until we get that CPI number, oil, copper, all the commodities are coming down, guys. Now that may not be until next the next meeting, but the banks, guys, look at the banks' earnings. That's going to play a role. Don't believe this shit. This is a fake. This is just a pump fake. I'm telling you. All right, the banks getting killed. They didn't get killed, but you know what I mean. Some banks got taken out. That is a deflationary event. Wait till the second round of earnings. All right, wait for Q2 earnings. All right, this is why Jay Powell is going to pause, and they can come on and say whatever the hell they want. All right, do they want the labor market to soften up? Yes, they do. But here's the thing. The banks just started they're tightening lending. Banks just started tightening lending. They weren't tightening lending all through here, which is, look, beginning of the year, first, second, third, fourth. They've literally just started through this mess. So you haven't gotten the second quarter earnings yet, and you've literally just started with banks and the loans. All right, that is where it's going. Unemployment is going to skyrocket. Now, quote me. I'm going to call it out right now. Give me August and September. Give me end of July, give me August, give me September, and you tell me if the unemployment rate didn't tick up. I'm telling you, watch. It just started. Give it like 3, 4, 5 months. All right? Give me to middle, end of summer. All right? If you have not seen the unemployment rate pick up by then I don't know anything about anything. All right? Maybe it starts now because we have had a full year just about of rate hikes. But banks weren't tightening lending. they were still lending at a high rate with high interest, at higher interest rates. Guys, look at this. Okay, I'm gonna show you guys something. They technically don't want this shit to break. Okay, look at the weekly chart of, let's just say, see, they just do big boy stuff. They're not like a regional. So let's bring up PNC and like. See, here's the thing, guys. This is construed, these charts. Now, Morgan Stanley isn't a bank, but so here is your 2008 era, right? You still haven't really made new highs. Okay, see, this doesn't paint the actual picture because they've been doing share buybacks. Okay, the stock has went up. This is Bank of America. You can look at JP Morgan. All right. Now, when they do stock buybacks, it inflates the share price. So it's misleading what you see here. What the banks have not experienced since like 2008 in a long time, the banks have not experienced a lending period with an interest rate over 5.5%. They have not experienced a full, like the full, what's the word? They haven't experienced a full reward of that. But now they have to tighten lending because there's a problem. Okay? They borrow it, like I said earlier when I tried giving you guys the treasury stuff, the 1 year, 2 to 10s, the 20 to 30s, the vocabulary for it. Banks borrow on short-term rates. So right now when they borrow, they're paying a higher rate, and then they lend on long-term rates. Okay, borrow on short-term rates, lend on long-term rates. Banks have not had an opportunity because of 2008, coming out of 2008, then 2018 happened where, they were just trying, they were working their way up. Powell took it back. Then we had 2020 2 years later, and now we have this mess. The banks have not had a period of lending at a high interest rate and seen the benefits and the reward of it. Because really, you should be playing banks. Not when things are wrong, not when you go from 0 to 5 in 1 year. Now, if you go from like 4 to 5.5, 6 in like a year, like 2 years, maybe 2.5 years, dude, the banks are going to kill it. The banks are going to kill it. But there's a little problem, there's issues that they were trying to resolve. So this is all from buybacks. Honestly, it's from buybacks. Yeah, they make money, they're safe, they do a lot of business and all, but these other regional banks like PNC, M&T, you name it, BNY, SoFi. Look at SoFi just getting ready to go. By the way, they said that. So SoFi has gotten hurt. Why has SoFi gotten hurt? SoFi's gotten hurt because they said that, with the bill that Biden and crew passed, the fucking dumbasses that they are, pretty much said you guys don't have to pay you don't have to worry about your student loan debt. The student loan debt program, whatever it was. So now what's going to happen? They're going to have to pay it. Did they save that money? Did they go out and try and purchase a new car because now they have cash settled up? What problems is that going to cause? So SoFi is really dependent on that, and they get a lot of new clients that way. What did SoFi do the past couple of days? Knowing that this happened, a nice double bottom. Look at today. Guys, it was up 11.5% today. So watch SoFi. Watch SoFi, okay? So I think they're gonna go send it to the courts, and the courts are gonna block it, or not block it, but just say, no, this is, kids go out, they sign a promissory note, they gotta uphold the promise. So that's something to look at. Also, again, if you guys want ideas, come join us 7 a.m. to 4 p.m. Ivy League Trading, YouTube.com. I'm gonna have a whole list and a whole game plan for tomorrow after we see some of the data overnight. what Christine Lagarde has to say. What news do we have that we wake up to? Do we get random company news? We might get some Disney news. There was BA news. Watch for Boeing. There was news on Boeing, I think, earlier. Something about like some order or something. And you know, you could see look at this shot up. You know, it was a day where I got rest. I ended up getting rest today. I had so much shit going on, but keep an eye on Boeing. Keep an eye on keep an eye on everything as far as around the world. Look at the world. The world is red, and AI is keeping us up. I mean, other than Argentina, but you know, Israel. All right. So this is going to be on my list tomorrow for sure. I'm watching these China ADRs. I'm watching the China stocks. Okay. And look, what's green? What did I say? Li Auto. Watch your solar stocks. All right, guys. Like, share, and subscribe if you could. It's greatly appreciated. I thank you all for your time. I hope you guys have a good night. I did not mean to keep myself up late. Hopefully you guys are not up too late as well. You guys have a good night. I will see you all tomorrow morning, 7 a.m. I Really Trading, youtube.com.